let me get this straight. So you have to write off almost $4 billion worth of loss because of a tech malfunction.
And the total amount written off amounted to $3.77 billion.
This reminds me of broilers, where they had to do that big write off.
How
So
many
can you
years is that?
imagine? You're telling me that almost
28?
30 years, 28
Yeah,
years,
almost 30 years.
this loss has wiped out your entire retained earnings from
Mhm.
then. Welcome back, Limit Breakers. I'm Dr. Thaon Simms, and this is the Limitless podcast, where we make money, markets, and big ideas simple. As always, I'm joined by my co-host, Dr. Matthew Preston. Hail up the Limit Breakers, Matthew.
Hey guys, what's good?
Nice. And today, you guys can see by the title and the thumbnail, it's a special episode, right? It's just me and Preston, no guests, And I thought, based on certain articles we've been seeing and a lot of chatter that we've been seeing, we kind of want to dive into what actually happened with this specific company called Derrimon Trading, and why did the shares get suspended? What's going on with the company overall?
And then I'm just actually noticing this. I don't know if you had seen this, that there was a notice about independent review. So they came out June 2nd, where they were basically saying that during the 2025 year, when they're doing the audit that we're talking about, matters were identified requiring further review and validation prior to the finalization of the company's audits. And they say questions arose regarding the information generated from the company's enterprise resource planning environment, which is basically how I see it is it's like an IT system that helps you to track a lot of your inventory and the price you're buying stuff at, what you're selling it at, how much stock you have. So it helps to manage a lot of that, which is almost
it's the central operating and accounting system. That's what I see. So like point of sale transactions, inventory stuff, accounts payable, financial reporting, everything goes through that system. So, yeah.
And then they say, following consultation with management and the board, the company's auditors commissioned its experts to do additional work to assess the nature, extent, and implications of the issues identified. So yeah, they actually had said that, hey, we're having some issues with our system that they noticed. And then the Jamaica Stock Exchange put out a notice basically saying that they were going to be suspended Derrimon's, the trading of Derrimon shares. So basically, if you had shares in Derrimon or Detail, you would not be able to buy and sell them during this period. And it's because you have to be submitted the financials within the time. So they had said, they even say here, the company's 2025 audited numbers were due on March 2nd, as you said, and became 92 days overdue on June 2nd. And so that's why they were suspending them. Basically, they fixed the ERP system. So it says here, Derrimon rectifies ERP system issue. They said following a comprehensive audit, they have rectified the issues with the ERP system. And they basically say how the issue originated. They said in 2018, the company recognized that to support the scale and complexity of its growth, it needed a more robust accounting and tech platform than the existing systems could provide. They did an extensive due diligence process, or basically researching on what system they should implement. They did industry research, site visits. They selected an ERP platform, and they selected an implementation partner. And then they began the scope of work for the ERP system. But then there was delays related to COVID-19, and it ended up beginning in 2021. So they're supposed to implement that system in 2021. They said they started it at their Maypen Select Grocers, where that supermarket that we're talking about. It was in late 2022 it went live, and it was supposed to be a pilot there to like test it out before I guess they implement it to the other stores. And then they also say in August 2023 they also had a cybersecurity incident which compromised the legacy system. So the older system that they had in place as a backup, I guess, that ended up messing that up. And then the external consultants recommended that they speed up migration to the new system from the vulnerable legacy systems onto the new ERP platform. And they said we acted on that guidance, And then we engaged a new implementation partner. Oh, so I guess they had an initial
So they
implementation
changed.
partner. Yeah, there's a new implementation partner in September 2023. So late 2023. Then they said in January 2024, they rolled out the platform across all the locations. But configuration and data-related issues began to surface more broadly, and I guess that makes sense. So it's like we were trying to put this system in place. We were trying to do it at a slower pace. Then, bam, we got hacked. We couldn't use the old system, so we had to switch up and use this newer system that we're still working on, that we were having issues with. And then now it's showing some of those same issues that they hadn't been able to fix. Well, yeah. So I guess they said, okay, how has all of that stuff impacted them? So they said a financial impact. So they said for the year ended December 2025, they reported a net loss amounted to 2.58 billion, due mainly to the stock write-off during the year. So they had to write off a lot of their inventory.
And
they
that's
said this
due
is
to
because
the
of
malfunctioning
there's
system.
There's a significant variances between the physical quantity and the perpetual inventory system. So what the system was saying wasn't actually matching up to what they actually had, I guess. And they also said that they even had to go back to previous years, and the total amount written off amounted to $3.77 billion Jamaican dollars. I mean, if you look at, I guess, some of your typical financial metrics, so I think the retained earnings part stood out to me a lot. So retained earnings are basically the amount of profit that the business has made over its lifetime minus the dividends that the company has paid out. And I don't think Derrimon is like a big dividend payer and such, but you usually want, if a company has been profitable, you'll have lots of retained earnings. So it's like, I view it as, it's showing you that your business has generated, basically that you have a profitable business. It's generated this profit over its lifetime. You want higher and higher retained earnings, and they previously had retained earnings, but because of this big write-off, it's basically the years that Derrimon has been operating, which is, do you know actually how long they've been around?
A long time, like 20 or 2000. I can't remember. I remember looking at it. It was incorporated in 1998, actually.
Just Google
it was listed in 2013. Yeah.
So how many years
can you imagine?
Is that?
You're telling me that almost
28?
30 years. Yeah, 28 years.
Almost 30 years.
This loss has wiped out your entire retained earnings from then. You know how I said I said it in a simplistic term, like, the computer system or tech. These tech challenges that made you lose the 3.77 billion. But if you look in the audited notes, they actually said the write-offs weren't only related to software configuration. And this is the 2025 full year audited notes. But
which
it's
note
also,
is this? I can pull it up. What number?
Hold on. Sorry, I'm looking at a...
Just search write-offs then, I guess. Let me see.
Yeah.
Operational financial reporting, inventory, pricing.
There we go. It's all of those. Inventory, pricing, purchasing, and internal control issues across Sampar, select grocers, and related operations. So the audited notes said the write-offs were not just because of software. To me, that's a bit even more serious of a conclusion, because yes, software might have been maybe like the trigger or the mechanism or so on, but they're also saying then that people, like supervision of people or so on, or even processes, all of those things were involved. So it's a lot more complex than just, something went wrong with the tech. It's like the systems put in place just were not, carried out, or were not necessarily the best. Point of this, I believe, though, and this is for the listeners, of course, all the limit breakers out there. I mean, anytime an offer comes out, I always say, like, you want to think it through, do your own research. You also have to manage the possible downsize, and you may have to downsize your position for that risk if it's on the table. But Derrimon is definitely one we will keep watching, and so should you. But thank you guys so much for being here. Please hit the like button. We would appreciate it. Subscribe, because we drop episodes like this every single Friday. And we'll be covering anything you guys want us to cover. Just leave it in the comments down below. Thank you so much. And like always, limit breakers, stay limitless.
Peace.